US President Donald Trump is set to announce a new set of tariffs tonight, which he's calling the Liberation Day. The tariffs are expected to take effect immediately and are aimed at tackling what he sees as unfair trade practices against the US. Stocks on Wall Street finished mostly higher after a volatile trading session as investors digested weaker than expected economic data showing a rapidly cooling economy. The 10-year Treasury yield ended at the lowest level of 2025 ahead of Trump's reciprocal tariff rollout. Stocks in the Asia Pacific have also opened largely lower as investors await Trump's Liberation Day tariffs. The GIFT Nifty is implying a flat start for our own markets. Oil prices are steady even as concerns that the new US tariffs, which are set to be unveiled later in the day, may deepen a global trade war that could limit crude demand, while gold prices have eased on profit-taking but remain near record highs as investors turn to safe haven assets ahead of Trump's tariff impositions. And GST collections rise more than 9% in FY25. The mop-up in March crosses 1.96 lakh crore rupees, which is the second highest monthly collection in the financial year. Midweek is here, so is the 2nd of April. We're here to bring you all the updates globally and locally on Power Breakfast on CNBC TV18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off this morning. And it's a cautious start, if you could call it that. The global markets remain on the edge ahead of the big tariff announcements that Donald Trump is set to make later tonight. The Seng down 0.8%. The Taiwan index trading above the flat line, 0.3% higher. The Nikkei is absolutely flat. The Kospi is trading with losses of around 0.5%, and some losses coming in for the Shanghai Composite as well, just below the flat line. So it's a very, very cautious day of trade in the Asia Pacific so far. And if you could pull up the GIFT Nifty, that will give you a similar indication that it is likely to start off on a cautious note is our own markets as well. The implied open currently suggesting an 8-point uptick, which was around 8 points lower a few minutes ago. So it's expected to be yet another volatile day of trade. But it was a volatile day of trade on Wall Street last night, where indices mostly ended higher, with the S&P 500 recovering from the lows of the day, as did the Dow Jones, but the Dow ended below the flat line. The S&P 500 gained 0.4%. The Nasdaq gained almost 1%. The markets there too are awaiting clarity from Donald Trump's next tariff policy rollout. The tech-heavy Nasdaq, of course, saw some recovery courtesy Tesla. And this is also despite the weaker than expected economic data, with the ISM manufacturing index, which measures factory activity for the month of March, which came in lighter than expected at 49, down from the prior 50.3 and slightly below the estimates of 49.5. Of course, the reading below 50 indicates that the economy is in contraction mode. Now, as I mentioned, the 2nd of April is here, and the global economy and investors are awaiting Donald Trump's latest tariff rollout plans. CNBC's Megan Casella joins in with more on this.
David, I was just inside the White House talking with officials on this to try to bring you guys the latest. And what I can tell you is that deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today where they will be talking through the different options that are on the table, and no options have yet been removed from the table. There's 3 main options that the president is considering here. One is a blanket 20% tariff on most all imports from most all countries that are sending goods into the U.S. Another is sort of a tiered basis, meaning that countries can fall into one of maybe 3 buckets. There will be maybe just 3 different rates and tiers of countries depending on the trade barriers that they have up. The third is the option we had previously been talking about the most, sort of a customized country by country approach. One White House official did tell me that that blanket 20% tariff rate, that's still back on the table, but that appears less likely than the other 2 at this moment in time. Here's what we know about tomorrow. We know it's going to be a 4 p.m. ceremony in the Rose Garden. Most cabinet officials in attendance, some workers, some manufacturers, some CEOs have also been invited. So we'll see who's there in the Rose Garden tomorrow. We know that the goal, they say, is country-based tariffs, not sectoral. So though there's been a lot of talk about pharmaceuticals and semiconductors, we do expect those at this point to come later and not to be announced tomorrow. And then one final thing, guys, is that as big as these reciprocal tariffs could be, they are just one piece of what we're getting tomorrow. And I don't want viewers to forget that we're also expecting the pause on Canada and Mexico imports to be lifted. We're also expecting those secondary tariffs on Venezuela to take effect, and the auto tariffs will take effect, guys. So no matter which of these options on the table that they choose, a big day tomorrow, no matter what, guys.
And tariffs are indeed the main focus across the global markets today. And listening to Chief Economic Advisor of Allianz, Mohammed El Arayan's comments on what could be the effect of such a potential rollout.
There is a case for a fairer trading system. There is a case for a fairer distribution of defense spending. And people see that. The question is, do you get there in one round or do you get there in multiple rounds? And that's really important because ultimately, I think we're looking at a 50-50 outcome, and I hate saying this. This could be a major rewiring of the domestic economy and of the global economy, a la Thatcher, a la Reagan, where you get a more enabled private sector, streamlined government, a fairer trading system. Or alternatively, if we get tit-for-tat tariffs, we slip into stagflation, and that stagflation becomes well anchored, and that becomes problematic.
Now, Goldman Sachs has reduced its economic and earnings outlook for the year on the back of this potential tariff impact. Now, here's Goldman Sachs' U.S. equity strategist David Kostin's comments on the same.
Right now, we're looking for around 3% earnings growth this year. The consensus expectations for all the analysts, other strategists on Wall Street are 9%, so that's a pretty meaningful gap. Expectation is you're going to get a pretty difficult first quarter. Companies will be less, inclined to give guidance, given a lot of uncertainty around how do you price products in an environment where the tariff situation is unknown. Even if we do get some announcements tomorrow, which of course we will, the question is what will the negotiation process be from that starting point? And so we've really been focused a lot with clients on companies whose share prices are less sensitive to the three big issues that investors are focused on, which is the tariff risk, the recession risk, and AI risk.
Let's now get to the final update in our global market wrap this morning. Stocks in Europe closed the session higher as Trump's reciprocal tariffs come into effect later today. The CAC was up around 1%. The DAX gained almost 1.75%, and the FTSE 2 was up around 0.6% in today's trading session. In yesterday's trading session, of course. So a positive handover coming in from the US. Now, the Washington Post has reported that the White House aides had drafted a proposal to impose tariffs of around 20% on most imports to the US. We keep an eye out on how all of this pans out later tonight. We'll be reacting to all of these announcements tomorrow morning. And the Stock 600, of course, the pan-European index, ending with gains of 1% in yesterday's trade. But that's the global market action. How will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Firstly, Vamakshi joins in to get all the market cues we need to watch out for. Vamakshi, good morning. It was a session to forget for the bulls, particularly for the large caps. But what are the cues you are watching out for today?
Well, absolutely, Hormaz. It was a disappointing start to the new financial year. The Nifty slipped by almost 350 points. The sensex was also down close to about 1,400 points. The market breadth, though, interestingly, was largely in favor of the advances, and therefore the broader markets relatively performed better than the benchmark indices. The losses on Nifty Mid-Cap 100 were, down, were limited to actually 0.86%. Nifty Small Cap was also down 0.7%. As far as sectoral indices are concerned, most of the sectoral indices closed in the red, barring, of course, the Nifty Media Index. Realty was the top drag. We had stocks like Godrej Properties, Prestige Estates, Oberoi Realty down nearly 3 to 4% in trade yesterday. IT, financial services and pharma indices continued to see some selling pressure. The India VIX, interestingly, surged by nearly 8%, and this indicated rising uncertainty, largely driven by the tariff rollout that is expected later tonight. As far as the US markets are concerned, S&P 500 finished about 0.4% higher, and this is after the index was flip-flopping in trade between the positive and the negative. The Nasdaq closed nearly 1% higher, while on the flip side, the Dow Jones closed marginally lower. So largely, it's a positive handover coming in from the US markets. As far as the cues to watch today are concerned, the most important will be the Liberation Day. US will be rolling out their tariffs, the reciprocal tariffs rather. So we'll be keeping a close eye out on that. S&P manufacturing PMI data for India will be out, and the US will also be reporting their crude oil inventories. Important levels to watch: the crucial support zone lies at 23,100. On the upside, could see some major resistance at 23,500. As of now, the GIFT Nifty is indicating a flat start to the Indian market.
We're looking to hold on to those levels of 23,000 on the downside. Vamakshi, thanks a lot for that update. And over to Upasana now, who lists out the stocks that you need to keep an eye out for today. Upasana, good morning.
Good morning. Well, it looks like a long list of stocks in focus today. First up, let me start with Coal India. The company announces coal price increase of rupees 10 per ton across coking and non-coking category, and the price increase will be effective from 16th of April. Next up is Power Grid. The company becomes a successful bidder to set up 400 kilowatt of transmission line in Madhya Pradesh. Next up is NMDC. The company has reported its March production data, which is down by about 27% on a YoY basis, and FY25 company's production stands at 44 metric ton, which misses the guidance of overall 50 metric ton is what the company had indicated earlier. Now, Hyundai India will also be in focus as the March sales of the company is higher than estimates. Overall, the sales saw an uptick of 2% on a YoY basis. MOIL will also be in focus as company takes price increase for iron ore with a magnesium content of 45% and more, a price increase of up to 3% and 0.5 increase for an iron ore magnesium content below 45%. Now, CSB Bank will also be in focus as the bank releases its Q4 update. Advances saw an increase of 30% on a YoY basis and 10% sequentially. Deposits saw an uptick of 24% and 10% sequentially. VMart will also be in focus as the company again releases its Q4 business update. The revenue saw an uptick of 17%, while SSG's growth stands at 8%. Piramal Enterprise will also be in focus as SC upholds Piramal Capital's plan for DHFL and NCLAT order for reconsidering resolution plan is rejected. Hence, this stock will be in focus. Sandhar Tech will acquire Sundaram Clayton's aluminium die casting business, and acquisition is via all cash deal at 163 crores. And lastly, Godavari Power Ispat will also be in focus as company says that it has temporarily suspended mining activity at company's Burai Tibo iron ore mine with effect from 1st April 2025. Hence, all these stocks will be on our radar today. We'll be closely watching out for all of them.
We will closely watch out for them indeed. Upasana, thanks a lot for that. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. Now the mission is to protect 23,000 on the downside, but what are the FNO cues indicating now?
It was a weak day of trade, and especially like after weak global cues, even on the domestic front, cues were mixed, and that was the reason that we saw a big fall, especially in the benchmark indices that have underperformed broader markets. And because of outperformance, relatively outperformance by broader market, we saw market breadth was in favor of advances. It was a minor in the favor of advances. And yesterday also we saw that FIs continue to sell, and yesterday they have sold more than rupees 5,900 crore in the cash market, while DIs have bought more than rupees 4,000 crore. Now, if you dig deeper and see the derivative data in the index futures also, FI have sold almost rupees 3,000 crore. But interestingly, in the index options and the stock futures, they have done some buying. Now, on the long front, they have reduced the exposure by 4,650 contracts, but at the same time, they have added short positions, and here the addition is more than 12,000 contracts. Now, with this FI long exposure now reduced to nearly 31%. But if you look at the option front, on the call side, 23,500 call has seen maximum addition of, that is addition of more than 90 lakh shares. And 23,400 call has seen addition of more than 66 lakh shares. Now, on the put side, 22,800 put has seen addition of nearly 24 lakh share. So it indicates you that on the downside, if we breach 23,000, next support comes around 22,850. That is also 20-day moving average. On the upside, resistance around in the range of 23,400 to 23,500. Lastly, in stocks in focus, keep an eye on banking heavyweights like HDFC Bank and ICICI Bank, because the reason is FIs have sold for two consecutive days. And another stock that I'll keep an eye on is Piramal Enterprises, and the reason is Supreme Court has uphold basically the DHFL's resolution plan, and that's the reason this stock will be in focus.
We'll keep an eye out on all of these names. Sudarshan, thanks a lot for that. We take a short break. Up next, we get you more news and updates on the other side. Stay tuned. Welcome back. Now, the US Trade Representative's report continues to place India on a priority watch list, citing intellectual property concerns. It has also flagged concerns over India's internet shutdowns and data localization rules, among others. Abhimanyu Sharma is here with the list of the key concerns raised by the USTR. Abhimanyu.
A day before imposing reciprocal tariffs, the US has raised concerns over several trade practices of India that may harm American interests. Now, these range from localized internet shutdowns that disrupt commercial operations to an Indian regulation that requires that dairy products intended for food must be derived from animals that have not consumed feed which contains blood meal. The USTR report on foreign trade barriers covers 29 major trade partners and has flagged India's regulations on the import of milk, pork and fish products. It has said that it requires genetically modified free certificates without providing a scientific or a risk-based justification. The US has also expressed concerns over India's price caps on coronary stents and knee implants, stating that these have not kept pace with inflation and do not account for production costs of innovation and potentially discourage US companies from serving the Indian market. The US has also expressed concerns about data localization requirements for payment services suppliers and banks. Also, the USTR report has said that India's average MFN applied tariff was 17% in 2023, which was the highest for any major world economy. It has also flagged that budgets since 2014 have completely raised tariffs on imported electronics, telecom, power equipment and renewable energy equipment. It has stated that India's flexibility to change tariffs for agricultural and non-agricultural produce creates a distortion and uncertainty for several American exporters and local businesses.
Abhimanyu, thanks a lot for that update. Now, GST collections in FY25 have risen more than 9% compared to last year. The collections in March stood at 1.96 lakh crore rupees. Now, this is nearly 10% higher on a year-on-year basis. Now, the mop-up in March is also the second highest monthly collection in FY25. So, the GST collections there, an important update coming in last evening. Now, the Indian government is facing a liability of more than 1 lakh crore rupees for outstanding sovereign gold bonds at the current price. Now, in a reply to the parliament, the government also revealed that outstanding sovereign gold bonds have underlying gold of 130 tons. Now, it is highly likely that this liability will increase significantly as the final tranche of the bonds is not set to be fully redeemed until 2032 and gold prices continue to rise steadily. Now, since the initial issuance of the sovereign gold bonds in 2015, gold prices have surged by over a whopping 252%. And in some important national news, the reworked Waqf Bill of 2024 will be introduced today in the Lok Sabha amid staunch opposition from the India Bloc and prominent Muslim groups, including the All India Muslim Personal Law Board. The amended bill is likely to have a provision that mandates that the ownership of the existing Waqf properties will remain as is unless they are disputed or are government property. Now, remember, this key provision was not there in the bill that was tabled in Parliament in August of last year. Now, at a meeting last evening, the opposition has unanimously decided to have a full discussion on the bill today, and they will vote against it in the Parliament. We take a short break here on Power Breakfast. Up next, we get your cues from the commodities market. There's a lot to track there as well. Stay tuned. Getting you the latest now on Donald Trump related developments. We have Dia joining in our special segment, Trump Watch.
President Donald Trump will announce his reciprocal tariff push on Wednesday during an event in the White House Rose Garden. Treasury Secretary Scott Bessent said in a Fox News interview that the tariff announcement would be at 3 p.m. Washington time. The president's team is said to be still finalizing the size and scope of the new levies he's slated to unveil on Wednesday afternoon. President Trump's sweeping tariffs are set to take immediate effect following their official announcement. According to a statement from the administration's top spokeswoman, these new trade measures will be enforced without any delay. President Donald Trump will meet on Wednesday to consider a proposal for divesting TikTok's U.S. operations from Chinese parent company ByteDance, just days ahead of a deadline for a sale of a popular social media app. The administration is considering a deal that would include Oracle Corp and Blackstone Inc. and potentially other investors in a joint venture, reports say. The Trump administration began mass layoffs of 10,000 staffers at U.S. health agencies on Tuesday, according to multiple sources familiar with the situation, with security guards barring entry to some employees just hours after they received dismissal notices. The cuts, which affect several high-profile agencies under the Department of Health and Human Services, including the FDA, CDC, and National Institutes of Health, are part of a broad plan by President Donald Trump and ally Elon Musk to shrink the federal government and slash spending. That's all for today. Back to you.
Dia, thanks a lot for that. Of course, all eyes on that big event later tonight. Now, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. A slight let-off in both crude and gold prices, but what else are you picking up?
Well, yes, Hormuz. Overnight, we've seen some profit taking come in. So copper was down 0.5%, silver fell 1.5%, and gold prices were 0.1% down. But come Asia morning right now, and we're looking at a bit of a buying coming back. Well, all eyes really on the U.S. Tariffs, the reciprocal ones. And ahead of that, there's, the volumes clearly have suffered in the Asian markets, and you perhaps would see that happen in the European markets as well. So crude oil prices are off its 5-week highs. Reciprocal tariff announcement. The other thing that the crude markets are watching out for is the OPEC and allies meeting, which was earlier supposed to happen on 5th of April, now has been shifted to 3rd of April. And the expectation is that 135,000 barrels per day from the month of May, as an increase in output, perhaps would see a go-ahead. But it's also the gold prices. As you said, yes, we've seen some profit taking, but we're still holding above $3,100 an ounce. The weak U.S. consumer survey data that came in yesterday has been supportive for the prices. And then apart from all of this, it's also going to be about the U.S. non-farm payroll data on Friday. So the next 2-3 days are going to be very, very crucial.
Very crucial indeed. Manisha, thanks a lot for that update. We'll keep an eye out on all of these factors. But with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.